Gold is finally breaking out, at least it looks like it. Probably needs some more to confirm. Let's check in with Mr. Scott Bauer, joining us, CEO of Prosper Trading Academy. What do you think, Scott? Is this a breakout in gold or not?
Ordinarily, I'd say yes from a technical standpoint. Kind of difficult, though, just given all of the backdrop here between the geopolitical tensions, inflation, the Fed. You know, you've got this perfect scenario. And quite frankly, I would have expected it to be even more of a breakout, Oliver. So I'm still very, very cautious. You know, it's up 4% just month to date here. It's a 3-month high. It's $30 away from the psychological number of 1900. So, you know, it's got everything going for it in terms of, you know, why do people buy gold, right? Why do they want to have it as a long-term asset? It's got everything going for it. To me, I don't understand why it's not higher. So I'm just very cautious.
You know, it does seem like the type of chart that could be very likely fake out, given so many times we got to the high end of that range and we were rejected. But as we inch above that most recent high there from November, things starting to get pretty interesting. To your point, you know, technically described as a breakout, but you know, it didn't do it without the Russia stuff, and that is kind of a complicating factor, right? Because there's a scenario in which maybe that has been overplayed, and then that risk dwindles, and then does gold go with it?
There's no doubt about it. What would have happened without the geopolitical conflict that we're going right now? What if it was just a matter of inflation? If it was just a matter of the Fed trying to tame, guessing whether we're going to raise 50 bips in March or 25, bips? What would it be trading on? Would it be trading on the stronger dollar right now? So then you bring in, what's happening overseas, and to me, this is like the no pun intended, the Goldilocks scenario for gold. And yet, yes, it's broken through, but not with a lot of velocity, in my opinion.
Yeah. Okay. So gold is still a decent session, 1.8%. Silver's doing even better. I mean, it has been climbing throughout the day. Silver's chart has looked even worse than gold, but I guess there's some potential for rebound here. It seems like silver bottomed out at $22.
No doubt. I actually like silver for a, whether you want to call it an inflation hedge or just a risk off hedge. I like silver better than gold right now. I think it's got more upside potential. The one that, talking about the metals, the one that really sticks out to me is aluminum right now. Look at that chart in aluminum. You've got, talk about the kind of perfect scenario for higher prices. You've got low inventories, rising geopolitical tensions. Russia is the second largest producer of aluminum in the world. And to me, this one again, and it's based on, the tensions over there right now, but you've also got this factor right here of very, very limited supply. So look at that chart to me, and I think this one has the ability, more so maybe than anything else in the metal space, to really break out and take off.
Scott, generally the calculus being made by investors right now, does it still skew largely towards trying to divine what the Fed is going to do? I mean, at the end of the day, Wednesday, we get some minutes.
Should.
Market moving?
It really should. I'm not minimizing what is going on overseas at all. I am not discounting that whatsoever. And we all hope that it doesn't escalate. But the bottom line is the market a month, 2 months, 3 months from now is going to trade based on what is happening here economically. And yes, so that really comes down to what is the Fed going to do? And I truly think, Oliver, and you and I have had this discussion, I think they need to just make their move. And whatever that move is, I think the market takes it very positively because the market does not like uncertainty. So once that uncertainty, at least the first Band-Aid maybe, is gone, is ripped off, I think the market reacts positively.
Scott, it's a weird situation where Fed funds are pricing in this expedited extreme hike in the short term and then saying we're going to start cutting next year, basically.
Yeah.
I mean, it seems a little fancy, the expectations. I mean, it's hard enough to get one move, 2, 3 down the road. How do you even kind of factor that into to a model at this point when they seem to have purportedly figured out the precise future?
Yeah, exactly. I think there's a lot of adjectives you can use for this. Fancy, confusing, convoluted. I don't think anybody really knows. They're really now backed into a corner trying to dance around this, dealing with, okay, we've got to pay attention. We've got to do something right now. But we still in the back of our minds, or maybe even the front of our minds, believe that 6, 9, 12 months right now, things are going to normalize. So it is really a tough call, which is really adding to the volatility in the marketplace.
Okay. Scott, is there anything that stands out right now to you that looks like a trend to be a part of? I mean, the market hasn't seemed to have picked its big trend. What stands out to you?
I think the longer end of the yield curve.
Okay.
Which because of the flattening we've seen over the last weeks or so between the 2 and 10 and some of the longer yield, that has got to expand back out. I'm not saying it's going to widen out immediately or widen out as fast as it consolidated, but to me, that's got to start widening out as soon as the Fed makes a decision. So I'm looking at, let's say, for instance, an ETF like TLT, which is the 20-year bond ETF. I think that's a great spot right now to get in, to look for upside there, because the yield curve is going to start normalizing, whether it's in a day, a week, a month or so. I don't know exactly when that's going to happen, so I'd look a little bit longer term. It's got to start normalizing.
Okay, I like that. That certainly is a trend. TLT is trending downwards, yield trending upward, and gold TBD still consolidating, possibly breaking out. We'll leave the definition for next time and see which way it breaks. So giving us a note of caution to believe it when we see it with gold truly breaking out. Thank you, Scott Bauer, CEO of Prosper Trading Academy. Good combo.